Welcome to this deep dive into Applied Digital, APLD. To understand where the stock is going, we first have to acknowledge where it came from. As formerly known as Applied Blockchain, the company underwent a massive rebrand and strategic shift, and they aren't just miners anymore, but are now positioning themselves as the backbone of the AI revolution. This content is for informational and educational purposes only and should not be considered financial, investment, or trading advice. All views expressed are based on publicly available information and personal analysis, which may not be accurate or complete. Investing in stocks, including Applied Digital (APLD), involves significant risk, and you may lose some or all of your investment. Always do your own research and consult with a qualified financial advisor before making any investment decisions. The creator of this content is not responsible for any financial losses or decisions made based on this information. The biggest update regarding their AI involvement is the massive expansion of their cloud services and high-performance computing HPC data centers. And unlike traditional data centers, APLD is building specifically for GPU-intensive workloads, while their recent partnership with major players and the acquisition of thousands of NVIDIA H100 GPUs has positioned them as a premier AI factory. And the market is no longer valuing them as a crypto proxy, but instead as an infrastructure play for large language models. APLD has shown explosive year-over-year revenue growth driven by their operational data centers in North Dakota, but building data centers is expensive. So we must also look at their recent financing deals where they have been securing massive debt facilities and private placements to fund the build-out of their Ellendale facility. And importantly, APLD is an elite partner in the NVIDIA Partner Network, which creates a fundamental moat because while others struggle to get chips, APLD's status ensures they have the hardware to rent out to AI startups, although the primary fundamental risk remains the dilution of shares and the high cost of electricity, with investors closely watching EBITDA margins to see when AI cloud revenue will officially outweigh legacy hosting costs. From a technical perspective, APLD often respects the volume-weighted average price on daily charts, and we have seen a series of higher lows forming on the weekly time frame, suggesting a long-term bullish reversal, while support has solidified around the $354 range during pullbacks and the $8 and $10 levels act as major psychological and technical resistance. And APLD frequently leaves gaps on the chart during earnings or news cycles, so price action traders should watch for gap fills before entering long positions, with the stock currently consolidating in a bull flag pattern and waiting for a catalyst to break multi-month resistance. The stock is also fighting to stay above the 200-day exponential moving average, and a sustained move above the 50-day and 200-day EMA crossover, also known as the Golden Cross, would signal a massive trend shift. While we are seeing RSI divergence where price remained flat, but the relative strength index started rising, suggesting hidden buying pressure, and the MACD is hovering near the zero line where a bullish crossover combined with strong volume could act as a key buy signal. And additionally, the Bollinger Bands are tightening in what is known as a squeeze, which historically has led to 20 to 30% moves in either direction within days. On the institutional side, there are rumors and filings suggesting increased holdings by Vanguard and BlackRock, adding credibility to the AI pivot, while data tracking shows high short interest in APLD, making it a prime candidate for a short squeeze if they announce a new major cloud contract or a strategic investment from a hyperscaler like Google or Microsoft. And social media also plays a role as it closely follows the CEO's updates, where any post regarding progress of the 100 megawatts or 400 megawatt facilities usually results in immediate retail volume spikes. And looking ahead, if they successfully bring their HPC centers online, revenue could triple due to AI cloud demand, and they could be re-rated by Wall Street as an AI leader. But on the downside, construction delays or further share dilution to fund operations could weigh heavily on the price. And as we look toward the next quarter, the combination of technical squeezes, fundamental AI growth, and social media hype makes APLD one of the most exciting yet risky stocks in the tech sector. So watch the 750 level closely, because breaking that could open the doors to double-digit prices. Finally, don't forget to like and subscribe for more deep market insights.